everyone. So today we're going to be working on Connect Problem 1 from the Chapter 7 homework. I just want to apologize in advance if there's any technical difficulties in this video. I'm going to try my best to do it. So first of all, reading the instructions, it looks like we're going to be working with Rosie's Dry Cleaning, which started on January 1st, year 1, and it experienced the following events during its first 2 years of operations. So we're going to be recording the different events from year 1 and year 2 on our T accounts, and then we're going to be determining a few different amounts for each year. So I'm going to start off here with year 1, recording each of the 3 events in the appropriate T accounts. All right. So it looks like our first event there is that we provided $45,000 of cleaning services on account. So a pretty typical transaction. I'm going to record a debit, $45,000 for accounts receivable, and a credit of $45,000 in service revenue. Great. Transaction number 2. We collected $39,000 of cash from accounts receivable. So here we're just going to record $39,000, a debit to cash, and $39,000, a credit to accounts receivable. Great. And then the third event here is that we're going to adjust the accounting records to reflect the estimate that uncollectible accounts expense would be 1% of the cleaning revenue on account. So we are going to estimate that we are not going to be able to collect 1% of the cleaning revenue we've recorded on account. So if we go to our service revenue T account, or if we just look at the event from above, it looks like we recognized $45,000 of revenue on account. So if we do a quick little calculation here, 45,000 times 1% equals $450. So that is the amount that we are going to record for uncollectible accounts expense in year 1. And how we record that is we are going to debit the uncollectible accounts expense for $450. And then we are going to credit our allowance for doubtful accounts. Allowance for doubtful accounts is a contra account to our accounts receivable. So that is the amount that we estimate that we will not be able to collect from accounts receivable. We are not sure right now. We are not automatically writing it off. We are not 100% sure. But that is our uncollectible accounts expense that we are estimating for year 1. So it looks like those are the 3 different transactions that affected year 1. So before I move on to part B for year 1, I'm just going to make sure to close out each of my accounts for the year, because that will help me determine the ending balances in each of the accounts and start off fresh for year 2. So here for cash, it already has the balance for us, $39,000, great. Accounts receivable, it already has the balance for us of $6,000, great. Service revenue, we're going to want to make sure to do a closing entry because revenue, as we know, is a temporary account. So I'm going to close it out $45,000. So we start out with a fresh balance of 0 for year 2. Allowance for doubtful accounts, that balance is going to be $450 going into year 2. And then our uncollectible accounts expense, that is an expense account, a temporary account. So we are going to close it out for year 1, a credit of $450 for a balance going into year 2 of 0. And last but not least, we're going to want to make sure that we are closing them out to our retained earnings. So the uncollectible accounts expense, we are debiting retained earnings for $450, and we are crediting retained earnings for $45,000 for the closing entry for the revenue for a balance of $44,550, which is already here. Great. So now I'm going to move on to part B for year 1. It asks us to find a few different amounts. All right, so it asks us to find net income for year 1. So as we know, our net income is revenue minus expenses. I'm just going to write that here, revenue minus expenses. So it looks like we just have one revenue account and one expense account. Up here we have our service revenue of $45,000 and our uncollectible accounts expense of $450. So I'm going to plug that into my calculator, and I find that 45,000 minus 450 equals 44,550. Oops. So that is our net income for year 1. So just service revenue minus our uncollectible accounts expense. Great. Now it asks us for our net cash flow from operating activities for year 1. So when I go back to my cash T account, I see that there was only one cash flow in year 1, and that was that collection of cash from accounts receivable. We know that that's an operating activity. So that $39,000 there, that is going to be the answer for net cash flow from operating activities for year 1. $39,000. So then it asks us for the balance of accounts receivable at the end of year 1. So luckily we already had that balance. We added up our T account, and we know that the balance of accounts receivable is $6,000. So I'm just going to write that in here. Then it asks us to find the net realizable value of accounts receivable at the end of year 1. So how we calculate the net realizable value of accounts receivable is we take our accounts receivable and we subtract the balance from our allowance for doubtful accounts. And that is how we find the net realizable value of accounts receivable. So I'm going to look for my balance in accounts receivable at the end of year 1. It was $6,000 as we just talked about. And my balance in the allowance for doubtful accounts at the end of year 1 was $450. So using that information, I'm going to do 6,000 minus 450. Going to plug that into my calculator to find that the net realizable value at the end of year 1 is $5,550. So all filled in, that is what the different amounts that we had to find for year 1 are. Great. So now I feel comfortable to move on to year 2. So going back to the different transactions, it looks like the events affecting year 2, number 1, we wrote off a $300 account receivable that was determined to be uncollectible. So this isn't just an estimate. We determined that we were not going to be able to collect this $300. It was never coming our way. So we have to directly write that off from our accounts receivable. We are not going to be touching our uncollectible accounts expense. That's an important thing to note when you see that it's talking about writing off an amount as opposed to adjusting for an estimate. So make sure to differentiate those two types of events. So it talks about $300 that was determined to be uncollectible. So what I'm going to do here is I'm going to go to my accounts receivable and my allowance for doubtful accounts, T accounts. And I am going to credit accounts receivable for $300 because we are not going to be able to collect that amount anymore. We are not expecting it anymore. So we are writing it off. And then our allowance for doubtful accounts, we are going to be taking $300 out of that as well. So when you are writing off an amount, you are going to be debiting your allowance for doubtful accounts, and you are going to be crediting your accounts receivable. For number 2, it says that we provided $62,000 of cleaning services on account. So that's pretty normal. $62,000 in revenue. And then $62,000 in accounts receivable. All right. Number 3, we collected $61,000 cash from accounts receivable. So I'm going to be debiting my cash, $61,000. And then I am going to be crediting my accounts receivable, $61,000. Great. Then we just have a 4th transaction here. Same as in year 1, we did an adjustment of our accounting records to reflect the estimate that uncollectible accounts expense would be 1% of the cleaning revenue on account. So again, we're going to estimate that 1% of the cleaning revenue that we brought in is not actually going to be collected in cash. So for this year, we had $62,000 in service revenue. So I'm going to do $62,000 times 1%, which equals $620. And that is going to be our uncollectible accounts expense. So I'm going to go in to my T accounts and I am going to debit my uncollectible accounts expense, $620. And I am going to credit my allowance for doubtful accounts, $620. Because that is our estimate for the year. All right. So now that that's done, I'm going to be able to total my different T accounts for the end of the year, find the different balances. And thankfully, I believe it is already done for you. So cash, $100,000. Accounts receivable is $6,700. We have service revenue and uncollectible accounts expense. It's not going to have us close those out at the end of the year because we're not doing a year 3 in this problem, so it's just not going to have us do it. And then allowance for doubtful accounts, we have our ending balance of $770 because don't forget, we had this debit over here from our write-off. All right, great. So now we're able to do part C, which is finding those different amounts for year 2. So first we have net income for year 2, revenue minus expenses as we know. So we just take our service revenue amount of $62,000 and we subtract our ending balance in the uncollectible accounts expense of $620. So for year 2, our net income is $61,380. Maybe I'll write it over here to the side just in case. 62,000 minus 620. That is how I got that amount, and it is from my T accounts up above for revenue and expense. Then it asks us again for the net cash flow from operating activities for year 2. I'm going to go over to my cash T account, and see that my cash flow was $61,000 for cash collection from accounts receivable in year 2. So that's the amount that I'm going to put down in my net cash flow. It also asked me for my balance of accounts receivable at the end of year 2. Thankfully, I already have my ending balance up here from totaling the accounts receivable T account. So I know that the answer is $6,700. And last but not least, it again asks us for the net realizable value of accounts receivable at the end of year 2. So we're going to be using the same formula from above of accounts receivable minus allowance for doubtful accounts. So in this case, year 2, it was $6,700 minus our ending balance in allowance for doubtful accounts, which was $770, for a net realizable value of $5,930. So that is all this problem was asking for. I'll do a little pan over of my work for you guys to see. And that is all.